beginning of the year, it is important to plan for the year. However, it's even more important to plan beyond the 1 year period and think about the next 10 to 15 years ahead. This is what we call the big picture outlook. And we found out that the sovereign debt bubble is about to burst, creating bubbles in other asset classes. So what does that mean for us traders? We will see increased volatility in the global forex, global crypto, and global futures markets. The good news is that crisis means opportunity, and volatility is a trader's best friend. We just had our Mastermind Trader Group meeting on exactly that. And in a nutshell, we found out for Forex, crypto, and futures. Forex, it's a decade of the big currency shifts, and it's actually gaining momentum. We've identified the 4 strongest and the 4 weakest currencies, and they are further stretched apart than ever. See a link below in the video description. Cryptos, we have just entered in a new volatile exponential up leg that should last for at least 1 to 2 years, bringing Bitcoin well above 100K level, even beyond the 500K mark. Find a video in the description below. Futures, it's a decade of the commodities super cycle bull, and it's building up energy and gaining further momentum. We can see that nicely with the metals, the gold chart, and I've as well put you a link below for you to review. Now, all 3 markets, Forex, crypto, and futures, they're global markets, and they're interwoven with each other in this big picture scenario. Now, what is the overall theme? It's a desperate flight for quality to find a safe harbor. So the debt bubble around the world is the mother of all bubbles. It's the biggest bubble there is. Now, when interest rates increase, governments will get into difficulties to service their interest payments. What typically happens, well, they start to print more and more money. As an example, at the federal government, expenditures on interest payments, where we nicely see how this is an exponential chart, right? And it started to pick up in 2008, the great financial crisis, where money printing started at a big scale. And then again, there's a big pick up here, beginning of 2020. Well, that was the start of the corona pandemic, the moment where interest yields started to increase. And we can see the impact of both money printing, like printing more debt, and interest yield increases on interest payments. They have doubled within a year, a very strong burden. This tendency will actually increase the underlying fear that government papers are not 100% safe anymore. The bigger the debt bubble, the more fear there is. The money will try to find a safe harbor, but there's no real safe place to hide, as funds get slowly reallocated from government papers into hard assets because they're looking for another safe place, so they have to move. So the debt bubble starts to lose pressure slowly but steadily. It's not a quick burst. Only small amounts of liquid funds coming from the government papers is actually sufficient to create individual bubbles in smaller markets, right? In other asset classes. It's basically charts that go exponential. This will scare people and make them undecided and nervous, but remaining in government papers will scare them even more. Now, the fear of missing out and not acting at the right time will be huge, right? People and institutions will feel trapped. So if you know me a little bit, I love trapped situations, trading the markets, and that is a huge opportunity as we perceive it. You want to be fully flexible, trading different asset classes and different time frames, from the higher time frames to the lower time frames, so to be able to capitalize on the big moves to come. Now, bubbles will pop up in different asset classes, different currency pairs in the crypto markets, in the futures markets, at different times as funds move from one asset class to the other. Now, this is the ideal market scenario for traders who are flexible. And you can call it a trader's dream to become true. Now, triggered by the sovereign debt bubble burst, the decades to come is looking turbulent with different driving forces coming together. So what are these? geopolitical unrest even more, rising conflict, asset inflation driving commodity prices, interest rate increases, and government failures, followed by sanctionism, protectionism, and a desperate search for safe havens. Is that any good for traders? Oh, yes, it is indeed, right? Crisis means opportunity, and crisis means volatility. And that is the trader's best friend. Find interesting links in the video description below. Please consider to like the video if you like it, and please comment and you will get a response. Have a good start into your successful financial future over the years to come.